Hello, everyone. I hope you've all had a good week, and we're here for another review. So, today I'm going to be reviewing the trade I took on Wednesday this week that was on crude oil futures, and this was the trade that I passed a 50k Apex funded account with. If you didn't see the short or the TikTok I posted, then yes, I passed the entire evaluation account of a Apex funded trader 50k account. I passed it in one trade, which I imagine will receive mixed reviews. A lot of people will probably just say it was, over leveraging or it was gambling. But I mean, the way I see it, it cost me £30 for the account because I used their 80% discount code, and I have enough confidence in my abilities to know that it was only going to take me a couple attempts, but in this case, it only took me one, and I really liked the setup. I was confident with it, so I thought, why not swing for the fences? Why not just try and get this done in one day and get straight to being funded? So yeah, I mean, you can call that irresponsible if you'd like, but it took me one day, took me one trade to get funded, so I'll take it. But anyway, let's get into the trade, why I took it, what I was looking for, why I was so confident with it, things like that. So yeah, this is crude oil futures. Let's zoom out a little bit. So between these two lines is the Wednesday. This is the day that I took the trade. If you're wondering why this says 5 a.m., that's because I'm in the UK, and 5 a.m. UK time is midnight New York time, which is New York time is the time that the algorithm runs off of. So midnight in New York is when the day sort of changes and resets. So zooming out, so on the hourly, let's go to the daily. So as you can see, we've been bullish for a while. We've taken multiple buy-side liquidity pools. Most recently, we had taken this one. Now, after taking this one, you can see we took it once here, and then we worked out one more time to take that. Then we work lower. So when we see that we've taken high time frame liquidity, and then we start working lower, the first thing I like to look for is the nearest obvious either imbalances or opposing liquidity pools. So for example, we've taken buy side here, so when I see us working lower, I'm going to start labeling the sell side liquidity pools, because the market likes to pair the liquidity. Once we take buy side, it likes to pair that with sell side. I also like to view it as any buy stops that were resting above here, it's likely that they had their stop losses and trailing stop losses below some of the recent swing lows. So I like to think that that's what the market is coming down for. So as you can see, we took this high once more. So this is the most obvious swing low. So you can see we came down for this. We took it here. Took sell side there. Worked up, gave a bit of relief after taking that, and then showed continuation lower. So what do? I zoom out and I look for the next liquidity pool. So that's the next target. So we work lower. We touched it here. We made an equal low here. This is quite a nice signature actually. When we touch, make a double bottom, I think it's called in retail, and then you see sharp bullishness away from that. I like to look for the first obvious swing high to be taken, because this is building in a bullish sentiment. Retail sees this as a strong level of support, so that's probably going to mean that there are quite a lot of buy stops above this. So we come down, touch this low, trigger the buy stops, and then we come down to take it because their stop losses will be down below here. So yeah, we clear out this liquidity pool, we offer some relief here, and then once more here, and then we yet again show continuation lower. I would define that by waiting for consequent encroachment of this wick to be closed below, because this is the last defending discount PD array for this swing low. So, you know, essentially the last thing it could come down for, and then me reasonably expect price to come higher, is this level here, consequent encroachment of the wick. So if we break below that, I see that as more high probability that it's going to come lower, rather than high probability that it's going to go higher. So yeah, we clear out this sell side, show continuation, clear out this sell side, we show continuation. So that leaves us with this sell side liquidity pool. Now also on the daily, I had this already labelled when I was looking at price, this fair value gap and volume imbalance. So when taking high time frame liquidity and you're expecting it to then come down to pair that, typically my favourite sell side liquidity pools to target are the ones that line up with a high time frame array. So some form of discount array. So in this case, it's the daily fair value gap and volume imbalance. So coming down to this sell side liquidity pool probably means then they're not looking to come much lower than this, because they've done their job of pairing the liquidity. It's come down to a level of real support, not retail support, real support. So you can, if it's going to continue higher, it's probably going to occur around this level, essentially, is what I'm getting at. So that was the framework heading into today. Let's go down to the 15-minute time frame. So as you can see, we did that in the morning. We opened up, dropped straight down lower, came into the daily fair value gap and took the liquidity. We then had a sharp reaction higher. We weren't able to get to this high, but we were able to get to these highs here. So that's offered some relief after we've taken quite a big sell side liquidity pool. So I liked, once we get to here, once we've taken sell side and then paired that with some buy side, I view that as a neutral position in the market. So once we get to here, at this point, I hold no bias. I'm waiting for price to show me which direction it would like to go next, because it's done its job, it's taken the liquidity and paired it. So I need to just sit and wait for it to tell me where it would like to go next. So I think it was on the 30-minute time frame I was watching this. So, oh no, I think it was, 30-minute. So yeah, we'd taken sell side, taken the buy side, and we'd also set relative equal highs here. So I was expecting a drop down in, but it's just whether we drop down and overlap all this, closing below all the fair value gaps, or if there's an order block here closing below mean threshold of that, I would see that as continuation lower, and then I'd look for the next sell side liquidity pool. Or we drop down into these fair value gaps or touching the order block, and then we show some form of a break of structure higher, and that's what we got. So we dropped down in I think it was the 60-minute, the hourly, so this hourly imbalance, we dropped down into this. We did retest this gap a few times, but as you can see, we did ultimately close higher, but I mean, this happened after I'd had my trade. So on the 30-minute, we came down, back down into this range. You could view this as a break higher because we're creating the bullish order block. So I mean, you could have potentially bought this if you wanted, but that could also just be viewed as retracing back into this fair value gap to then come lower. So I like the fact that we came up into it, returned to this order block, but then we got another break of structure higher. by closing above this propulsion candle. That for me was the nail in the coffin to tell me that we were going higher. So once that happened, what's my target? It told me we're going higher. So very simple, I just labelled the first untouched buy-side liquidity pool. And it was these relative equal highs here. Very clear, very obvious buy-side liquidity pool. Now also on the 30-minute, obviously there's no closure below this, but there are wicks down below this. So as we go down to the 5-minute, we obviously have this structure here, where we do have closures below here. But anyone that's familiar with ICT's concepts will know immediately what this is. This is a bullish breaker. So we label the highest consecutive up-close candles, which are these two. So once we break out above these two, the rules of the breaker is we would like to see it retraded to and then move higher. Now, this is one of my favorite setups when you have your bias, you're confident with your bias, you know what you're looking for. In this case, I'm looking for bullishness up to these relative equal highs here. And my favorite thing is when the structure only gives you one possible area of entry. So for example, in all of this price action, there is only one untouched fair value gap, and that's here. So that just makes entering so much easier. You don't have to look and try and think, oh, you know, it's got this fair value gap, but let's say this one hadn't been touched. Let's say this was open as well. That it just makes it slightly more difficult. You know, if I put my entry here, my stop loss also has to be below this as well, because I would prefer it to touch this and go higher, but because this is open, I still have to allow for it to come down to here. So my stop loss would probably have to be down here, which is, you know, quite a large stop. I think that's less than a 1-to-1. My profit's there, my stop loss is there. Yeah, it's awful. But yeah, we filled this in, so I'm not looking for it to come down there. This is the only thing I'd like to see it come down for, and it overlaps perfectly with the breaker. So it just makes entering so much easier. So my profit's there. Stop loss goes below the low of the middle candle of the fair value gap. So it's a 1.3-to-1 risk to reward. And I mean, yeah, we were aided by the 330 crude oil inventory numbers, but yeah, whether we had that news or not, I was more than confident. This is one of the most textbook beautiful setups I've seen. And so yeah, I set my buy limit here, came down, triggered it, and then ran it immediately. And yeah, I put the maximum amount of contracts on that I could. The 50k Apex account allows you to trade with 10 contracts, and luckily this distance from here to here was the exact amount I needed, $3,100. I think it was like $33 commission, and $3,000 is the profit target. So yeah, absolutely perfect trade, perfect distance, perfect setup, very clean, very obvious, very quick. That's always what you want. If you've got a good setup, there will be limited movement. It will do exactly what you want to see, and there won't be any wasted movement. Also, if you are wondering why there aren't any execution arrows, that's because I no longer have access to the account that I took these trades on, because it was an evaluation account which I passed, so they then just sort of automatically swap you over to your funded account, and you no longer have access to the evaluation account. So I can show you, I'm toggling executions, but there's nothing there. It's not the same account anymore, and I no longer have access to it, so the arrows aren't there. But you know, I recorded the trade, and it's on my YouTube Shorts and my TikTok, if you'd like to go and have a look at it. let me talk about what I was looking at on dollar, because dollar's the main thing I look at. I don't make any decisions, and I don't take any trades until I have a fairly strong conviction of what dollar's doing and where dollar's going. That's typically the first box I tick off before I take a trade, is do I know where dollar is going? And then once I have that, I then simply cycle through the assets I like to trade, and I just look for a setup that aligns with my bias on dollar, or my direction on dollar. And that was simply the case with this. I liked my direction on dollar for the reasons I'll explain in a moment, and as I was cycling through, this immediately caught my eye on crude oil. I'd already had a look at the framework earlier in the day, so I knew roughly what I was looking at, but then once I'd seen that we'd done this, I knew instantly that this was going to be a buy. But yes, let's get into dollar. So dollar, I struggled reading dollar the end of last week, particularly Thursday and Friday, but the beginning of the week on dollar was really nice. I really liked it. So let me put this on. So these yellow bits are the weekends. So in between this is 1 week of trading. So as you can see, this is where this week started. This is where this week ended. So from here to here is last week. As you can see, very heavy bearish week last week. And then let's go down to the 15-minute. So this was the low of the week last week. And dollar, we opened up, and then on the Monday we took that low, only by a little bit. But this is one of my favourite signatures in price. And this doesn't just have to be off a big week as well. This can be off a large range day. But when you have a large either week or day trading mostly in only one direction, so if it was a big bearish week or a big bullish week, this is what I'd look for. So big bearish week, I look for the Monday to take the low, because retail is typically going to be thinking one of two things. If we've had a big bearish week, there's going to be a lot of sell stops below this for the ones that think that it's just going to continue going lower. They just want to get in as soon as they can. So as soon as it takes that, they're expecting a sort of breakout and expecting it to crash lower. Alternatively, you have the ones that after a big bearish week will be expecting a reversal. And as an ICT trader, I have had it grilled or drilled into my brain to not trade against the high time frame direction. So in this case, on the high time frame, we are bearish. So I'm not going to be looking to buy this. However, at the start of the week, I am expecting, especially once we take this, I am expecting bullishness to give us the sort of Judas swing for the week. And so once we take this, that tells me that it's trying to trick retail into thinking it's going lower. So that's the perfect time to bring it up higher. So each time you're taking one of these highs, there's a lot of buy stops above those for people thinking that it's going to be a reversal. So it's kind of got the best of both worlds. It's entered all the people that breakout traders and want to see it continue lower. It's kicked them all out, and it's also come up higher to enter everyone that thinks it's going to be a reversal. Now I've got this blue line highlighted. Oh, let's turn that off. Sorry, not blue line. I've got this purple line highlighted. This is, I believe I had this in the last video as well. This is the consequent encroachment of this daily wick. So 105, 193, 105, 193. So that is the midpoint of this wick. That is what I would have liked to have seen the high of the week been for this week. That is where I would like to see the retracement higher stop, which, as you can see, is exactly what happened. Let's bring that back quickly. So yes, from this point to the close of the week, from the open to the close of the week, this was the high of the week. That's exactly what I was expecting and wanted to see. So yeah, we tricked everyone thinking it was going lower, then we tricked everyone thinking it was coming higher, but for me, I was confident in expecting lower prices once we got to here. So between this line and this line is the Wednesday that I took the trade. And I took the trade, I believe it was entered at 3:30 p.m. So let's go from 3 o'clock. So from 3 o'clock, I can see that we've had quite a strong reaction off this. I didn't really like how clean all these highs were. I did think it was a possibility that they might stab one more time up here to clear this buy side. But ultimately, I liked the reaction I'd seen off this level. So we'd been working lower, and we'd taken this fairly small but quite obvious sell side liquidity pool. We'd taken that here. We had then worked higher, taken the buy stops, and then we'd sort of just been floating around a little bit. Then when we get this candle here closing below this order block's mean threshold here, I am interested, because as I've explained a few times in my previous videos, I really like seeing when we take out, for example, sell side liquidity, I like seeing it paired with buy side, and then this is a neutral position. So I like, if we come back down into this and then we get a break higher and show willingness to move higher, I'll look to target buy side liquidity pools. But if we take this sell side, we pair it with buy side, and then we close below the defending PD array, the last defending PD array, that's a sign that we're bearish. And first thing I do is I zoom out and I just find what the next sell side liquidity pool is, which is this. And my bias is cemented by the fact that, one, we closed below mean threshold here, but also the fact that we created a fair value gap here, we work up into it, and then we get another break of structure lower off that. Sorry, not break of structure, we create an order block off that. So that is big, strong signs that we are coming lower. And if you want a third point in there, we get a beautiful immediate rebalance as well. And then we close lower on that candle. So at this point, this is just before 3:30. So this is when I'm looking at oil. So I'm very much targeting this low. I can see the fact that it didn't get there, but I think this happened in one of my other reviews. It doesn't need to get there. That's just my bias. I'm expecting lower dollar. I'm not trading dollar. This isn't where my take profit is set, so it doesn't matter if it gets there or not. But this, for me, is where the magnet on price is. This is where price is being pulled down towards. It doesn't always have to get there. Just has to offer me enough. And that's exactly what we got. So once I'd seen this, I knew my bias on dollar was bearish. Cycling through the assets I like to trade, saw this beautiful setup on crude oil. Only one possible place for an entry. If we'd have come below this and closed below this fair value gap and midpoint of the breaker, I might have just entered a sell position. I might have just swapped it around, quickly closed the buy and swapped it around, because this is the only, this PD array is sort of like a fulcrum point. If we bounce higher off of it, that means we're going higher, but if we come below it and then come up into it, that probably means we're going to come lower. So that I love seeing one fair value gap in a run like this. When you have a strong conviction on dollar, you want to enter on that one PD array. But yeah, there we go. It was a bit long-winded, I apologise, but yes, that is how I passed an Apex funded account, a 50k Apex funded account, on one trade. I hope you enjoyed, and have a lovely rest of your weekend.